Growing inflation in the United States of America. According to an article published by The Guardian, U.S. inflation has risen by over 6.8% in the past year, highest since 1982. The stock markets are going down. S&P 500 has shown negative returns of 3.05% in the past 6 months. From January 2021 to January 2022, Consumer Price Index, CPI, increased by 7.5%. Core CPI includes food and energy, 0.6% in January alone and by 6% over the past year. Increasing prices have taken over the good nights of common consumers due to adverse effects on monthly budgets. It is important to know why the prices of everything are touching heights. Why inflation is growing in the U.S. economy. Federal Reserve's key role is to conduct national monetary policy, maintaining financial stability in the economy. Fed also plays a major role in controlling inflation and increasing employment opportunities. To create new employment opportunities, Fed decreases the inflation to boost new businesses. Federal Reserve lowers the rates to almost 0% in March 2020 at the beginning of the pandemic. In the recent meeting in January 2022, Federal Reserve keeps the federal funds rate between 0% to 0.25%. While in the beginning, Fed inflow funds to support the U.S. economy from pandemic, which now gives rise to higher inflation. According to Lawrence Summers, former Treasury Secretary, blamed the coronavirus relief package valued at $1.9 trillion by President Joe Biden major reason to push inflation. In the past few months, they have realized that rising inflation can be a bane to the overall economy with a major effect on the labor market. Federal Open Market Committee decided to start selling its assets in March 2022 to deal with the inflation in a better way. Along with bond purchases, it is expected that Fed will increase the federal fund rate after the March meeting. Furthermore, according to the CME Group, Fed could raise the rate 5 to 6 times this year. How long will it last? Inflation will keep its feet until companies find ways to create continuous demand for goods and services, and the Fed no longer needs to insert money into the circulation. The general target of the federal bank is to keep 2% inflation, but many economists see inflation will be going to 2% above the Fed's target this year. Fed has started taking actions to keep control over high inflation rates and will be starting to increase the federal funds rate after the March meeting, which can even go up to 5 to 6 times in a single year. While if the impact of Omicron will keep increasing, it might become greater to cause to already shooting inflation rates. On the other hand, Russia's invasion of Ukraine can be worse. It will depend on the period and depth of the war. 30% of the world exports of wheat are derived from Ukraine and Russia. The war between them would lead to scarcity of the wheat across the world. Furthermore, due to dry weather conditions, continuous low prices in the U.S., farmers gave preference to plant corn and soybeans instead of growing wheat, which will increase the wheat prices. There are other factors as well which decide the continuance of higher inflation, but as of now, majorly depends on Russia's invasion of Ukraine. How will it affect you? Due to the continuance of higher inflation, the purchasing power of consumers is depleting day by day. Even worse, hourly earnings of the private labor department fell by 1.7% in November compared to last year. But for the restaurant employees, it might not be the problem, as wages for restaurant employees have increased by 7% and by 14% for hotel workers. Inflation slowly erodes the value of your savings. It can be a little worse if you are invested your major portfolio into fixed income instruments, while it can be good news if you are repaying loans, as you will need to pay less amounts if interest rates are lower than inflation rates. The good news for the general consumer, Fed is looking to increase the interest rates. But according to Melissa Brown, global head of applied research at financial intelligence firm Contigo, if inflation is going to come down a year from now, that's not particularly helpful to the average consumers of today. Conclusion: it is difficult to know when will inflation start decreasing as a general consumer. Most people avoid buying a new car or even an old one. While the interest rates are low, but the cost of a new car has increased to 11.1% compared to last year. And if you think of buying an old car, it will be even worse due to the 31.4% increase in the prices of used cars. It is advisable to take advice from your financial advisor before making any major decision about your investment portfolio or buying things out.